And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs. And it is Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply, 6,030 things trying to sell. Johnny, show me that chart.
Right. So this number is ticking up very slowly. We're at 0.1% higher. And if you want to know the actual difference in numbers, it's 4. That's how much it increased. But, bear in mind, this is an overall look, Noah. So this includes everything that went on, but then it subtracts everything that came off. So, you look at what's, we've talked about this before. We have our net new listings chart that we talk about sometimes. And this is basically, what's on the market. So this includes new actives. And there's also a lot of stuff coming off the market, mainly the off market stuff. So overall supply growing very slowly, but keep an eye on the weekly numbers coming up.
Yeah, supply tight. Supply is tight. I feel like that inventory number should be starting to go higher at a quicker pace. It's not. We'll keep an eye on it. Johnny, let's switch to demand. Pending sales, 2,146 things waiting to close. Johnny, show me that chart.
Yeah, and this is down, and we've been talking about sort of the death by paper cuts of pending sales, and it continues again. It's just every week is like a tiny bit down, more here and there. So, you think about what pending sales are doing, and they're declining. Why? Because there are not that many contracts being signed. However, right, we're getting into that peak spring season, so you can definitely know you can see the light at the end of the tunnel, but we are still in the tunnel here, Noah.
Yeah, liquidity is low. We're going to talk about that soon. It feels like it's perking up. A lot of anecdotal reports. Anecdotal reports lead the data by about 2-3 weeks. We're in that bridge gap right now, Johnny. So we have to wait. So we're not seeing it yet. And that's why this market pulse, guys, let's make a mark, 0.36. We issued that alert. We are in the buy zone. Buyers, be aware of what you're in, because we expect this to probably go higher, which means you're going to be losing your leverage advantage over time. Let's go to the dashboard. Let's look at the weeklies, not the monthlies, the weeklies. I see supply 319, Johnny, up 22%. Show me that chart.
Right. And so you look at the weekly numbers. This is why I think we're in a bit of a crunch time, because that supply is starting to do what supply does at this point. Now, again, granted, it's a little bit lower on a weekly level than it has been in previous years. But the overall idea is that new supply is rising. We have more sellers coming onto the market today than we had last week, the week before, et cetera. So that's normally what you expect to happen in the spring market. Now, we're going to look at contract signs in a second. And what I want you to remember is that as long as these things are in proportion, as long as supply increases and contract signs increases, right, the leverage sort of stays even. So as we go forward, it's important to kind of keep an eye on that balance.
Yeah, I'm glad you brought that up. They kind of mute each other out, right, Johnny, as they both rise together. And I think they're both coming in light. They're both rising, but they're both coming in light based on historical trend of where we should be. I don't know. We'll see it over time. I'm looking at contract signed, Johnny. 1 week, 161 things signed into contract. That's up about 7%. Johnny, show me that chart.
Right. So they're both rising. But again, you look at where this weekly new supply was up 23%. Contract signs are only up 7%. So again, we're in that early stage of the listing season in which the listings are going to outpace contract signs. But again, you really got to watch those contract signs as we get into the next few weeks, because they really should rise in order to meet the challenge. And if not, there could be a bit of an issue there.
Yeah, John, and let's talk about that, John. You got your 1 month trend right over here. I love the 30-day trend. I love the 30-day moving window of contract signed. That's 632. That is a 30-day moving window. Every day it moves 1 notch. And if you take that number and you look at what that chart looks like of that number going back 6 months, a year, and 3 years ago, this is what it looks like. And you could see the tick up. You could see why we issued that buy alert. Right? We're seeing the data start to come in. We're seeing the bids start to go up. It's what it's supposed to happen, Johnny. But where are we supposed to go? That's what these lines are. If you look at that red line at the end of February, we are supposed to be up at that red line. That's average. That is not high liquidity. That is not low liquidity. That is neutral historical liquidity. So you could see where we need to go by the end of the month just to get to normal, right? And if you look slightly ahead to the active season peak months of March, April, May, and June, it's in a converged range of about 1,000 to 1,100. So I just want to point out while we're ticking higher, we still got a long way to go, Johnny.
No, you're exactly right. And again, the nice thing about this chart and why I think this is an important chart is because especially for buyers, especially for sellers, right? If I'd like to focus on sellers for a second, right? You're listing into this environment, and this kind of suggests that the number of buyers out there right now is a lot lower than you would kind of expected. It's got a long way to go. However, those lines represent long histories. They're going back 10 years. So it includes highs, it includes lows, it includes the wild gyration from 2020 up to 2022. So you got a mix of things, but again, like you said, that's the direction the market wants to go. Will we get there? No one's quite sure yet, but we're below it. So on the sell side, you got to understand what you're selling into, what you're listing to right now. So you're putting your listing out there, but the liquidity is lower than usual at this point. Is it going to rise? Perhaps it should rise, but your mileage may vary. On the buy side, right? Think about this. You're in this tunnel, right? Again, going back to that tunnel analogy, and those lines are sort of the light at the end of the tunnel. So we know we're going to head that direction, generally speaking. The question is, all right, well, when you get to those lines, what's your competition look like? What is your advantage versus other buyers?
Yeah, and that's the whole logic behind it, Johnny. That's the exact logic, is we expect it to go up there, and we expect that buy-side leverage to just slowly tick away as the bids, as the liquidity comes back. And Johnny, I love this chart so much. I love it so much that I'm putting it on the new site, which tells me, Johnny, let's show everyone what the new site is, guys. I've been talking about it for a while. Here is a preview. We are in final testing. Every Tuesday and Wednesday at 11 o'clock, we do classes. This site is going to become a central place for you to go for workshops, live classes, live events. You'll just join. And if you scroll down right over here, we're going to add this chart right over here into our weekly repertoire for our weekly videos. And you could see on this chart, we even defined the zones. We defined the zones of high liquidity, low liquidity, and neutral. And you see that tick up. And I just want to paint a quick picture of what I think might happen. You could see this tick up and come in light, come in below average. So it's a lower liquidity season. However, the supply situation is also coming in light. So what you might see is the market pulse, which incorporates both supply and demand. Okay, this is only the demand side, right? You might see the market pulse more accurately reflect the sentiment shift that's going on. So the next 3 to 6 months, very interesting. We'll take a look at both of these, Johnny. I'm so glad that we got a chance to segue into this and got John Walkup. That is John Walkup, everyone. Data King over here of New York City. Thank you for pulling up all this data. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you got questions, we got answers. Please visit our forum right over there. And if you want any of the reports and charts that we whipped up today, it'll be right over here in just a few seconds. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you next time.